What is the difference when reporting taxes between a foreign owner and a U.S. citizen?
The U.S. citizen is obligated to report on the income that he or she receives in the USA and the income that he or she receives in foreign countries. It's what is called a worldwide income inclusion, meaning that wherever the income is coming from and the person receiving or the recipient of that income is a U.S. citizen or a U.S. resident, all the income received in the U.S. or from foreign countries needs to be reported to the IRS. Now, even providing there's an obligation, the taxes paid in the foreign country are a credit that needs to be taken in the on the return when there is the fine.
Okay.
Now, in addition to that, when the company buys the property in the USA, the foreign company will be subject to something that is called FATCA. That is a tax, I'm sorry, as retention that the at the moment of the closing, the attorney or the title company that is the one in charge of, of doing the transaction of the sale of the property held by the foreign company will withhold up to 15% of the proceeds of the transaction, and later on the company will need to file a tax return to pay the taxes of the capital gain for the gain that they had when they sold the property, and pay those taxes and claim a refund. That's something that is called FATCA.
Understood. Third question. I want to open an LLC in the USA and I own several properties. Is it better to have one company for all properties or one company for each property?
It will be better to have one company for each property. Now, that will be cumbersome because you will if you have a large portfolio, you will have to open many entities, and that is not practical. What we have seen or we have experienced with client is that they open one company. This could be an LLC or an S corporation. Let's say LLC. They start holding properties, holding, and then they create what is called a land trust. A land trust is a trust that fractions the risk. So if you have a portfolio of 10 properties, you create 10 land trusts and put each of the trusts to the original property. So you have property number one, property number two, property number three. You put land trust number one, land trust number two, land trust number three, till you get all the properties covered with a land trust. The objective of that is to limit the increasing the asset protection and limit the risk. The problem with holding many properties in one company is the risk that you have if one tenant that who is living in one of the properties got an accident, and if the insurance or the assets of that entity of the where he lives, the assets meaning the property is not enough to cover the damages, and your insurance is not enough to cover those damages either, the the aggravated person will come after the rest of the properties that you have in that company. That's a real problem of holding many properties into one entity. That's the risk that anything happens and you have to respond with many entities within the many entities that you have within the ownership of the property. So 100% protection is one property, one entity LLC. If you don't want to open multiple LLCs, you can put the properties within the LLC, but you need good insurance, homeowners insurance. You need good liability insurance like the blanket insurance. It's called liability insurance. It's a blanket coverage for the portion between the homeowners insurance and anything beyond that the homeowners insurance doesn't cover, you need that. And in addition, you need a land trust. And the land trust will be the beneficiary of each of the properties. That way, those three things you will need to make your property sound. And even though if there is any risk, someone falls, someone sleeps, you will be able to protect the rest of the investment if that property is compromised.